Hello everyone. Today's topic is going to be really important. I'm going to explain you golden rules of accounting. These rules are considered as the foundation for all the accounting transactions. These rules helps you in identifying which account to debit and which one to credit. I will explain you each rule one by one with example so that you can easily understand the topic. Let's start. The first rule is debit what comes in, credit what goes out. This rule is applicable on real accounts. To better understand this rule, you should know about the real accounts. Real accounts are related to tangible and intangible assets like building, equipment, vehicle, cash, trademark. We maintain a separate account for each asset and its balance is carried forward to the next year as a beginning balance. Let's take an example. Machinery worth $3 lakh was purchased for cash. First of all, observe the account involved in the transaction. Two accounts are involved in this transaction, machinery account and cash account. As there is outflow of cash for purchasing machinery, so as per the rule, what comes in? Machinery. What goes out? Cash. Therefore, journal entry will be machinery account debit to cash account $3 lakh. Rule number 2. Debit the receiver, credit the giver. This rule is applicable on personal accounts. Personal accounts are related to people, association and companies. There are three types of personal accounts. Take a look at each type. Natural personal accounts. The account that are related to any individual are called natural accounts. For example, John account, Mary account. In short, we can say that these accounts are related to human beings. Second type will be artificial personal accounts. These type of accounts represent legal entities that are not considered human being by law. For example, bank, companies, hospitals. Finally, third type is representative personal account. These accounts represent the accounts of natural or artificial persons. Let's take an example. Suppose salary is payable to 100 employees. The amount due to employees can be shown under one account, that is salaries payable account, which represent all those 100 employees. Similarly, prepaid rent, accrued interest, unearned revenue are all example of representative personal accounts. I hope these three types of personal accounts are clear to you. Take a look at this transaction. Invested $1 million in business. Now observe the transaction. There are two accounts involved. Cash account, which is a real account, and owner's equity account, which is a personal account. Therefore, we will apply golden rule number 1 and 2 to record this transaction. Cash account is a real account. Therefore, the first golden rule will be applied. That is, debit what comes in, credit what goes out. Since cash is coming into the business, cash account will be debited. Next, owner's equity account is a personal account. Therefore, the second golden rule will be applied. Debit the receiver, credit the giver. Since owner is giving cash to the business, his account will be credited. That is, owner's equity account will be credited. Therefore, the journal entry would be cash account debit to owner's equity account $1 million. Let's take one more example so that you get the clarity about the topic. Payment of $1 lakh is made to the account payable. Two accounts are involved here. Cash account, which is again a real account, and accounts payable account, which is a personal account. We will again apply both the rules. Cash is a real account. Therefore, the first golden rule will be applied. That is, debit what comes in, credit what goes out. Since payment is made to the accounts payable, cash is going out from the business. Therefore, cash account will be credited. Accounts payable account is a personal account. Therefore, the second golden rule, that is, debit the receiver, credit the giver, will be applied. Accounts payable is getting payment. He is the receiver. Therefore, his account will be debited. Our journal entry will be accounts payable debit to cash $1 lakh. Finally, golden rule number 3, debit all expenses and losses, credit all income and gains. This rule is applicable on nominal accounts. What are nominal accounts? These account involves income statement accounts which are closed at the end of the year, that is income, expenses, losses and gain. These are some examples of nominal account. Get back to our rule number 3. Debit all expenses and losses, credit all income and gain. Paid salaries for the month amounting to $1 lakh. Two accounts are involved in this transaction. Salaries account, which is a nominal account, and cash account, which is a real account. Apply the rule number 3. Debit all expenses. Therefore, salary expense account will be debited. Rule number 1. Debit what comes in, credit what goes out. Cash is going out from the business. Therefore, cash account will be credited. Therefore, the journal entry will be salaries expense to cash. Let's take one more example. Record cash sales of $2 lakh. Two accounts are involved here. Cash account, which is a real account, and sales revenue account, which is a nominal account. Therefore, we will apply the golden rule number 1 and 3 to record this transaction. Cash is a real account. Therefore, the golden rule number 1 will be applied. Debit what comes in, credit what goes out. Cash is coming into the business. Therefore, cash account will be debited. Sales revenue is a nominal account. Therefore, golden rule number 3 will be applied. That is, debit all expenses and losses, credit all income and gain. Sales revenue is income. Therefore, its account will be credited. Journal entry will be cash account debit to sales revenue account. Finally, we take an example involving all three types of accounts. Sold good to buyers for cash and on credit. Cash sale was $1 lakh and credit sale was $2 lakh. Three accounts are involved in this transaction. Cash account, which is a real account receivable account, which is a personal account, and sales revenue account, which is a nominal account. Now apply the 3 golden rules to record this transaction. Cash is a real account. Therefore, the first golden rule will be applied, that is, debit what comes in, credit what goes out. Cash is coming into the business. Therefore, cash account will be debited with $1 lakh. Next, accounts receivable account, which is a personal account. Therefore, golden rule number 2 will be applied. Debit the receiver, credit the giver. Since receivable are created by selling the goods on credit, accounts receivable account will be debited with $2 lakh. Finally, sales revenue account, which is a nominal account. Golden rule number 3 will be applied. Debit all expenses and losses, credit all income and gain. Sales revenue is an income. Therefore, its account will be credited with $3 lakh. Therefore, the journal entry will be cash account debit $1 lakh, accounts receivable account debit $2 lakh, to sales revenue account $3 lakh. If you still have any query regarding this topic, you can ask in the comment section. Thanks for watching.